to your timeshare in writing and in a specific time frame. Call us today to receive a free, no-obligation consultation at 833-594-0077 or online at LoneStarTransfer.com.
Financial Focus with Leo Leiden. Weekday mornings 8 to 9 on WBNW, 1120 AM and 102.9 FM. The Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. Our guide this month is titled Retirement Tax Efficiency. Mike, when people retire, what are some of the biggest surprises that they receive in the tax department upon retiring?
Well, most folks end up avoiding it, but for a lot of people, when it comes to Medicare, there can be a little bit of surprise when it comes to how those premiums get calculated on a year-to-year basis.
What types of things can factor into where those premiums end up in any given year?
Yeah, so there's something called IRMA, which stands for the Income-Related Monthly Adjustment Amount. And long story short, they base your Medicare premiums on your combined income, but sometimes that you don't really think about items that fall into your income. So let's say you raised your family in this home, and somewhere in the Northeast you end up selling it, and you end up making more than $500,000 on it. Or maybe it's a parent's property or a big stock or a big retirement package. You can actually see your Medicare premiums take a severe adjustment. And that's almost never income that people are thinking about. Like, no, I sold my home. Why should that factor into my Medicare? Well, it can in certain circumstances. And so it is just one area that we look at to say, hey, this is a surprise because it's a tax that nobody faces until they turn 65.
Our guide this month is titled Retirement Tax Efficiency, and there are 2 different ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute
is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hope you all had a fantastic weekend. It's Chuck, Mike, and Tucker with you here today. And big story that we're going to start with, the obvious shakeup in the U.S. presidential race, with Joe Biden dropping out of the race over the weekend, and the presumptive favorite to win the Democrat nomination now is Kamala Harris. I say presumptive because, well, for a few reasons. The first is, as we've seen over the last 4 weeks, a lot can change pretty darn quickly in this race. 4 weeks ago, you go back to mid-June, a week before the debate, and betting markets, which I think they're not accurate, but they at least give you a general proxy of what markets are thinking and what people are thinking, said, former President Trump has a slight edge over President Biden to win the race. Immediately after the debate, everyone kind of woke up and said, that slight edge is probably a large edge because that was not a good debate performance by Joe Biden. And so very quickly, I think he went from kind of like a 55% probability of Trump winning up to 65-70 is what I've seen in a number of places. And from there, you then continue on. And a week ago, then you had an attempted assassination of Donald Trump. And then this weekend, you had Joe Biden drop out of the presidential race. So
there's been one Monday where we haven't had first of its kind type news to share.
A lot can change quickly. And this is why, quite honestly, it's really too early to still be talking about the presidential election with any degree of certainty, confidence, or the idea that we have any idea what's going to happen, because there still is a long, long way to go. There's 105 days to go at this point.
To that end, the CNBC article that we have to cover today is that markets could unwind the Trump trade after Biden drops out of the presidential race. Can we do away with the notion that there was any form of Trump trade?
There was some. I'm going to disagree there.
Okay.
And I don't think it's where people were looking, though. And what I mean by that is the last week and a half of what we've seen in markets has been in no way related to the presidential election. Because A, it started on a Wednesday, but and none of the big news has happened on Wednesdays in the last month. B, I think that when you look at the idea of, hey, what is the Trump trade, it's been concentrated in two areas, in my opinion. The first is interest rates, where you have the idea that, hey, a second Trump term would mean tax cuts, which would be accretive to, corporate earnings and things like that. So you'd have, stocks potentially doing well. But on the other hand, a widening deficit, a further widening deficit, which, could put some pressure on interest rates to move up there. So I think those have been kind of the two main components as I see it. The third, I guess you could lump in there in some of what we've seen the last week and a half, but again, the timing doesn't really click in that, hey, if the U.S. economy is going to be stronger because of tax cuts, leading to more economic growth, then in that case, your small cap stocks wouldn't necessarily be hit as badly, but higher interest rates would hit them. So I think the last week and a half has been much more about the really cool CPI that we got again and the Fed cutting interest rates more than what's going on in the presidency. And this is all caveated by the fact that if you try to look for stories in markets on a daily basis, you're always going to be able to make one up, but that doesn't mean that it means anything.
Yeah, I guess here's where I would point out my concern that there was really any true Trump trade here. The S&P 500 since June 27th, which we just defined as a bit of a turning point for
I'm guessing
polls
it's like
on
flat to up 1%.
It's up less than 0.5%.
Yeah.
The yield on the 10-year Treasury, right? If we're talking about spending and reaction to inflation and interest rates, the yield on the 10-year Treasury on June 27th closed at 4.288. We're now at 4.218. Yields are down slightly since then. We saw a quick one-time bump. On July 1st, the yield on the 10-year went up to almost 4.5. But since then, everything has moderated and changed. And so I can, again, paint a picture here and understand why people are putting an idea behind a Trump trade or a Biden trade or now a Harris trade. But I would really challenge the premise that any of those will play out for anything more than a couple of days.
Quite honestly, the time to talk about a presidential election's impact on markets starts somewhere around Labor Day. I know that that's not popular because everyone always it has to always be the most important thing, but right now it's not.
Well, and furthermore, I mean, there's going to be pieces. There are pieces already written. There's one from where
right, like what is
today.
What is the Harris economy going to be? It's like, how the heck am I going to know what the Harris economy would be?
Right. Could it be more progressive? And what does that mean for green energy stocks? Well, I don't know, but
who the heck knows?
Go look at what it meant for green energy stocks under the Biden administration, who passed the single largest bill on green energy investment in our nation's history. It hasn't meant much. So I think all of these things are clearly impactful. They are clearly impactful on the makeup of our Congress and what sort of laws get passed and whether they are more regulation or less in the way of regulation. All of these things do have impacts. But just be really, really, hesitant or skeptical about someone selling you on an investment thesis of what's going to perform well or poorly based on any of the events over the last 4 weeks.
4 months before the election actually happens.
Right.
No less.
Right.
It's, again, so much can change. Like, again, right now you are going to have at least one different candidate who is running. Who knows what the next 105 days look like? I think we all need a little bit of humility after the last month in ascribing certainty to anything related to this race. Because I'll raise my hand, and look, this might make me sound dumb, but I don't know what's in store for the next 12 weeks. I have no idea how this is going to play out. There are any one of a million scenarios, and none of us know exactly what is going to occur. Because here's what I will tell you. If you correctly predicted the last 4 weeks before it happened, First of all, there's something really wrong with you.
Yeah,
because that's hard to nail that. There's a lot of bingo that you got to play to get that right. Beyond that, okay, even if you did get the last 4 weeks exactly right, like you're sitting there on June 22nd and you say, okay, Biden's gonna basically be half asleep during his debate. He's going to face pressure to resign. He's going to resign, in late July then and throw his weight behind Harris. Okay, even if you exactly nail that, did you have the attempted assassination attempt of Donald Trump last weekend? Like, these things are just inherently unpredictable, and this is why I say, from a market perspective, there still is too long to go before we get to the election to say that anything's really moving things definitively, in my opinion.
I'll give Chuck a little credit where credit's due. I'm not sure if we can pull the tape from like 3 or 4 years ago, but at one point in the last 4 years, I remember Chuck distinctly predicting that Joe Biden would not be the next candidate for president for a number of, I think you said he would not be the next president, regardless of whether or not Donald Trump is, which I thought was
for 24.
Yeah.
I don't remember saying that, but I'll take credit for it anyways.
I distinctly remember it, and I'll try and remember the context of it. But I distinctly remember that prediction from Chuck. So
Tucker, can you go back through
Didn't look
all
like it
of
was
our
gonna pay
shows?
off.
Can you go back through the 1,000 shows from the last 4 years?
Yeah, it only takes 5 minutes.
It's 2,000 hours, which is if you do that, Tucker, that's a 40-hour work week for the next year. So
Okay.
you'll find it by this time next year.
Yeah.
In addition to doing the job that you're already doing.
Perfect.
I'll just have my Roomba raise my kids. It's fine.
There's an AI for that now. Let's take a quick break here. When we come back, are we going to actually try to analyze the Harris economy?
We can move on. Yeah.
Instead, let's talk a little bit about earnings and the rotation that we are seeing in stock markets that is kind of wild and kind of cool. We'll talk a little bit about that when we return.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud member of a military family, including my father, Victor, and my brother, Timmy. Serving my country was one of the greatest achievements of my life, and it's why I choose to give back to this special community. My father built Veterans Development Corporation, and I am honored to continue his legacy of working to help many disabled veterans and their families. It also gives me great pleasure to once again be the presenting sponsor of this year's DAV 5K Boston. I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zodda from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
All right, so a little bit of earnings chatter as we head into the week. We've got a couple of big names that are going to be reporting earnings this week. A lot of what really are large companies, but they almost get classified as mid-size now just because of how big tech is. Today's pretty quiet. You had Verizon before the bell. Other than that, it's just a bunch of names. Yeah. I don't think anyone really looks at, Simpson Manufacturing and says, oh, this is a big one for the U.S. economy. But tomorrow, after the bell, you've got Google, Tesla, and Visa. Between the three of them, you're talking, $3.2 trillion in market cap. And can you believe that Visa is a $500 billion company now?
Kind of can with their, what do they have, like 60% of the U.S. credit card market or something
huge.
like that?
I still remember when they IPO'd. I was working in New York back in 2008 as an intern at the time, and I remember the amount of hype about the Visa IPO. Here's the thing, even with 60% of that market, they're going to do like $30 billion in revenue this year, so $500 billion valuation seems a little hefty, but it's neither here nor there.
We'll be seeing a lot of them over the next few weeks for other reasons.
Bum. That's the Olympic theme, right? Yeah. Yeah, it starts, what is it, Thursday or Friday this week?
Friday is the opening ceremony, and I believe that Visa once again has a ton of advertising, but also the exclusive credit card at the Olympic.
It's everywhere you want to be. Or is that American Express?
I don't know. Coca-Cola also reports on Tuesday, but funnily enough, we're not really even mentioning them because their market cap is like $280 billion, and that's just...
Well, and you know what you're going to see. It's going to be, okay, our sequential growth was, 1 to 3%.
Yeah.
Margins are being pressured by, tough blah, blah, blah.
Currency weakness, etc.
Yeah, the ones that are going to really matter here, Alphabet, Tesla, Visa, and I guess you could even throw Texas Instruments, who reports then, just as a general, state of the semiconductor industry as well. But this is something where the last week or so has really pressured, those magnificent 7 names that have been driving a lot of the upward market activity in markets over the last year. If you look at the 1-year performance on Mag 7, Microsoft up, and again, this is 1 year as of right now, Microsoft up 28%, NVIDIA up 167%, Apple up 17%, Google 53%, Meta 61%, Amazon 41%, and Tesla, where the heck are you hiding? Tesla's actually down 5.74%, believe it or not, over the last year now. The 1 week performance on those names, Microsoft down 237%, NVIDIA down 5.25%, Apple down 3%, Google down 3%, Amazon down 4%, Tesla down 2%. Okay, there's been a lot of red there, and the rest of the market has been, kind of rotated into. So
speaking of that rotation, just for a moment, I looked at when the NASDAQ peaked, which was July 10th. And this is what people are talking about in terms of this rotation. So since then, the NASDAQ price return was down 494 as of Friday. The Dow was up 1.5 thereabouts, 1.4, and the Russell was up 6.5. That Russell NASDAQ shift is this big thing that everybody's talking about, and you now have a 11% divergence in terms of which direction they've gone in this really 2-week period.
wouldn't it be wild, and it just to, on a related note, wouldn't it be wild if this, who knows where this goes over the next month or two, but wouldn't it be wild if the peak in tech, specifically the NASDAQ, ends up being a really cool inflation report? Because that came out the morning of the 11th, before the 11th started trading. Wouldn't it just be, it would be a complete reversal of, do you remember the end of 2022 in October? We got an inflation print, a CPI print that was fire, just like really, really hot. And that marked the bottom of markets from the bear market of 2022, that hot inflation print. We just rallied basically ever since then, a year and a half ago. Wouldn't it be just kind of this poetic, movement if, hey,
what was it? 0 on the inflation report? Negative
it was
0.1?
negative 0.1 headline and 0.1 core.
Yeah.
And if you go back to look at the October data and look at October 22, not even 23, but October of 22, the headline number that we got there was 0.51. And the core that we got there was, hang on, I'm just pulling it back up because I do remember it was very roasty. The core that we got was 0.36, so it rounded to 0.4. And that was the bottom in markets because they just rallied from there. Wouldn't it be this, kind of bookend here on this 1.5 year period if you get this really cool inflation report and it ends up marking some kind of, short to intermediate term top in markets? Because I don't think it's the top forever,
Likely not.
I have a feeling that eventually stocks might move beyond there, but, who knows?
So there's been this interesting rotation. As you mentioned, a couple massive names in markets going this week. The following week, we will hear from Microsoft. We'll hear from Meta as well. MasterCard. So you've got another, $4 trillion plus of market capitalization reporting next week into this, again, this pivot that has occurred in a shift away from the tech-heavy high flyers of this year and into some other areas. And the question is that everyone is asking, is this marking some sort of longer-term rotation, some just quick pulling back and taking some profits, or something, some new trend entirely? And I don't... Again, with these types of things, everyone likes to attribute a cause. Everyone likes to attribute some sort of human quality to what's happened in markets over the last few weeks. And sometimes it's not really all that knowable, and you can't really point to any one item.
Yeah, this ultimately you won't know if this really means anything until a year from now. Because we've seen smaller versions of this happen in the last year or two where, again, not to this extent, but hey, the Russell's outperforming. Does this mean that, small... And the answer the last year and a half has been, well, no, ultimately it wasn't something that mattered. Could it this time? It could, but...
Tell me why. Right? Like, give me something behind it. I don't...
Not even tell me why. Like, prove it. And the only way to prove it is to let it actually play out.
Yeah.
With markets, the thing you have to remember about markets, the prices that they're showing at any point in time are just probabilities expressed through price. That's all it is. It's not, hey, this is 100% going to happen, because if it were, then markets would never change. You're always seeing, markets trying to digest, hey, what are the probabilities of X, Y, and Z happening? And sometimes instead of X, Y, and Z happening, A, B, or C does, and it's like, oh, we didn't even think of that. We've got to completely reprice this because, hey, it wasn't priced in. As an example, see the last week and a half. If everyone knew that small caps would rally, they would have rallied before. So there are things that are off your bingo card or just very, priced as very low probabilities that become reality. And that's how prices actually change in markets. Let's take a quick break here. And when we return, we've got Wall Street Watch, and then we're talking about the current update on the CrowdStrike fiasco and how it's affecting markets and businesses.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question. And the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable and it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can simply request the guide from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory to start the week as Wall Street digests yesterday's breaking news of President Biden dropping out of the upcoming election. Traders are also readying for a busy week of second quarter earnings with major names reporting, including Alphabet, Tesla, Visa, and Coca-Cola. Right now, the Dow is up by about 0.25% or 91 points. S&P 500 is up over 0.75% or 46 points, and the Nasdaq up over 1%, trading at 227 points. Russell 2000 is only off by 0.25%. 10-year Treasury yield down by 2 basis points at 4.21%, and crude oil down about 0.5%, trading just below $80 a barrel. After plunging on Friday 11%, shares in CrowdStrike down another 10% today after Guggenheim downgraded the stock to neutral from buy, where the financial firm said CrowdStrike is unlikely to emerge unscathed from the global tech outage we all saw on Friday. Meanwhile, Verizon reported mixed second quarter results ahead of the open, meeting earnings expectations but missing on revenue. The telecom company did, however, add 218,000 consumer subscribers in the quarter, 7.4% higher than the previous quarter. That stock down by 6%. Elsewhere, a filing from Warren Buffett's Berkshire Hathaway revealed that the company sold 33.9 million shares of Bank of America for almost $1.5 billion. Bank of America shares are down by about 1%. Abercrombie & Fitch shares are up 2% after the retailer was upgraded by J.P. Morgan to overweight from neutral, citing strong demand for the brand after improvements in marketing over the years. And Apple up about 1% after Wells Fargo upped its price target to $275 per share ahead of its second quarter earnings due out next week. Wells Fargo said it expects Apple Intelligence will drive a significant upgrade cycle for the iPhone maker. I'm Tucker Silva, and that's Wall Street Watch.
So last Friday, many of you awoke and saw
nothing worked.
That a lot of stuff connected to the internet not really going well that day. If you had things that weren't connected to the internet, like a lawnmower or a couch or a piece of paper, those were largely unaffected. But if you were trying to move money from a credit card, if you were trying to access a brokerage account, have a medical procedure, fly anywhere, anything that requires some connectivity to a computer.
Hell, even some things that we don't even usually associate with computer connectivity, like a newscast on TV, which obviously is heavily connected.
I would
to
associate
the internet.
that with
I know,
being
but
connected.
with cable, it's not the traditional thing I think of with an internet outage of cable TV programs or news programs not being able to report the news, but they too heavily impacted by this outage on Friday.
So what are we seeing as the week starts anew, and now it's Monday 3 days later? You still have some problems here and there, not because computers are necessarily still locked out en masse because of this CrowdStrike issue, but hey, it takes a while to dig out of this. What I can tell you, if you know anyone in IT, give them a hug today because they've likely been working around the clock over the weekend. It's been a really tough, 72 hours in terms of trying to get everything back to functioning. But one of the areas that we're seeing the most lingering impact is in air travel, specifically Delta. In this case, hey, the roulette wheel came up then. A couple of years ago, it was Southwest with all of the ice storms that came through their hubs in Texas. This week, it's Delta because I guess they have an outsized reliance on CrowdStrike, and so it took a while, A, to get their systems back up, and B, trying to get pilots and equipment to the locations that you need them. It takes 5 or 6 days to unwind that kind of problem when you have a schedule that's based on, efficiency of minutes in some cases to get pilots from point A to point B.
Yeah, I think everybody has probably been impacted or heard of somebody impacted at some point by the plane had a mechanical issue and, your flight crew timed out of their hours because they can no longer work, or your pilots did, and we have to fly in a new crew from Topeka, whatever
Always
it might
Topeka.
be. It's always Topeka. this is, on steroids what Delta is experiencing now. So through the weekend, Friday, Saturday, and Sunday, according to the Wall Street Journal, you had a total, this is not just Delta flights, but I assume they are a large portion of them, more than 7,000 flights canceled Friday, Saturday, and Sunday. As of 7 a.m. this morning, you had 600 additional Delta-only flights that had already been canceled today. We probably are a higher number now that it's a few hours beyond that. For point of comparison, according to the Department of Transportation, which fined Southwest a few years ago, their 2022 Christmas blow-up resulted in 16,900 flights being canceled and 2 million passengers being stranded during that period of time. So just contextualizing some of this is a pretty significant blow-up, but across all U.S. airlines appeared to be 7,000 flight cancellations over the weekend.
So that's where things stand as of today. And I do want to talk then about this piece from the Wall Street Journal. Its headline is "Blue Screens Everywhere, Our Latest Tech Woe for Microsoft." Microsoft is really getting caught up in like some just in all of this here where I don't think they're at fault in any way, shape, or form. Like, Microsoft did not cause this. Microsoft did not do anything to make this worse. It just is, hey, you had a vendor that built a program that accesses the core of your operating system, and they mass pushed an update without testing it appropriately, and that's on them, not on Microsoft, in my opinion. I can't believe I'm defending Microsoft here, but this is, like, they didn't do anything to cause this.
So what do you make of the critique from I don't know that anyone at Apple themselves has made this or lobbed this one, but hey, Apple is much more of a closed system that wouldn't have allowed this type of update to go through based on their security settings and systems where it's far more controlled than the more open architecture of Microsoft's own systems.
Yes, are you willing to pay a 40 to 60% premium for that?
But you do believe that ecosystem might have prevented this? Because I think it's a very hard maybe on this, because it's not as though Apple does not allow system updates from third parties. It just tries to police them a little bit better.
Sure.
Nothing to say that this couldn't have impacted Apple systems. It just didn't this time.
I don't think there's any huge difference between the potential vulnerability. It's just, hey, would it have been caught? Maybe, but I don't think, again, the fact that this happened here, again, people are going to say, oh, this is a huge problem. This can't ever happen again. And first of all, with CrowdStrike, odds are probably won't, because when you have something like this that does happen, do you know how many sets of eyes their updates are going to have to go through now before they push that button that says, send to users?
Hopefully more than the sets of eyes on Boeing products.
Correct. Okay. But the other piece is, and the thing that I think we forget on this is it's not like this happens every day. We have literally never seen anything like this before at this scale. And so the idea that, hey, this is a problem that we all need to really address, and no, I'm not going to change my life because of this. I'm not going to change my devices because of this.
Probably not. Yeah. Quick word of caution for probably more the small business owner and user out there. CrowdStrike themselves came out with a warning that some bad actors are trying to exploit the event by,
of course,
as they always would. But this specific bad action is attempting to get out there a quick fix to the problem. And what I've heard is, look, if you are Bank of America, you have your own internal IT team that's been working around the clock to make sure you're up and running. Whereas if you don't and you're reliant on a third party, then it's when we get around to you. So bad actors are putting out this file that's apparently going to be a quick fix to the problem. A file named crowdstrike-hotfix.zip was being distributed that include malware enabling hackers to remotely control or monitor a user's device, which, again, hopefully you wouldn't fall victim to a CrowdStrike outage and then fall victim to a malware hack, but not terribly surprised when people are in desperate measures to get something back up and running is typically whether it's, the 85-year-old retiree who's being taken advantage of or the corporate CEO that's under pressure to get things quickly back up and running.
Well, I guess the question is, I do wonder how well it would, like that approach would work for the hackers, because if your computer is blue screen of death, you can't download the malware onto the computer because you can't open it.
Yeah, good point.
So like it would clearly be targeting someone who is not tech savvy at all, because if you're actually impacted by this, you can't access your computer.
Yeah.
So if you're just getting random emails about, hey, are you impacted by the CrowdStrike thing, and you can read them on your computer, then you are not impacted by the CrowdStrike thing at this point.
Yeah, it's a fair summary.
So don't do anything then, or talk to your IT people. And that's what they're there for. Quick break here. When we come back, talk a little bit about the job market and where it stands as we head into kind of the third quarter of labor market data that's going to be coming out in the next week or so.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zodda from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001. And you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Congress is poised to pass a bill to keep AM radio in cars, but time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
ZipRecruiter released their second quarter job seeker confidence index data.
Raise your hand if you knew that was a thing before today.
No one here is raising their hands, and I'm guessing that no one who's listening to us is raising their hands either, aside from the 3 ZipRecruiter people who are obviously listening. But the index found that their number measuring job seeker confidence was 93.1, which is down from a first quarter reading of 98.9. Now, I don't know how to reflect what that number means, but what it is, it's the lowest job seeker confidence data that we've seen in the last 2 years. And here's how their chief economist, Julia Polak, expresses this, quote, "The U.S. labor market remains strong in the aggregate, but conditions cooled substantially in most industries over the past quarter. Job seekers sat up and noticed." So it seems to me that this is still a labor market that is tight by historical standards, but nowhere near as easy to find a job now as it has been in the last couple of years. And in some industries, it's getting significantly harder to find jobs today. So there is some real weakening that's happening in the labor market right now.
Yeah, and you can see that whether you take the ZipRecruiter data or whether you just look at publicly published government data on the state of the labor market in terms of job openings and folks looking for work, the uptick in the unemployment rate. On this one survey, I got to tell you, I'm on the ZipRecruiter website and I see data only going back to the first quarter of 2022. So tough to contextualize what this actually means. Obviously the labor market is not as strong as it was in 2023. That's about all I think you can conclude here. I don't think you can go so far as to say, well, what does this tell you about this compared to 2018 or 2011? And that's the more interesting comparison in my view right now, because we all know that 2023 was nuts in terms of job offers and raises and bonuses and anything to do with finding a job and staying in a job.
A couple other just interesting data points from this that, again, don't tell us anything about what's going to happen in the future, but just about how people are, expressing what they want out of a job now. The survey found that the median desired time until start date was 3.5 weeks in the second quarter, down from 7.5 weeks in the fourth quarter. So you'd think, what does that actually mean? Hey, why does someone want to start sooner? Probably because they feel, some financial pressure to start sooner. And so I do think that that's something meaningful you can take from this as well.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Headline in the Boston Globe today, Massachusetts moves closer to mandating employers disclose salary ranges on job postings. I'll quote here that this would require employers with 25 full-time employees or more to disclose salary ranges on their job postings and protect an employee's right to ask for salary ranges in the workplace. Mike, your thoughts?
Wouldn't be the first state to go about doing this.
No,
New York,
been a couple, right? Colorado?
Colorado, I believe, did. New York did as well, and specifically in both of those states, if you, I think, have any presence in those locations, or if the person could hypothetically work remotely in those locations, then you have to. And in fact, if you look at some remote jobs, they, at least initially, were being posted as available to work in any location other than Colorado when that one was initially published. A few more liberal-leaning states are going this direction. Companies don't like it. They like negotiating in those hiring meetings and not having the exact ranges out there. But does anybody look at, New York City jobs and say, oh man, those businesses really can't find anybody to hire, or look how burdensome it is. They're going to be moving out of New York City with their company because they have to disclose the pay ranges on their jobs. It's I don't think it's the most burdensome regulation that I've seen out there.
No, look, it's miles ahead of California with its, hey, this industry gets this minimum wage and this one gets that. This is something where, look, quite honestly, how much time do you spend, you meet with a candidate and you're like, oh, this is going to go great. And then you're like, here's the salary range. And you just hear the audible, oh.
Right.
To
me, this is, one, I don't know that it's a necessary regulation. It is just another layer on there of stuff that needs to be in there. I know why they're doing it. A lot of it has to do with pay discrepancies and tendencies for men to negotiate more on wages than women have historically. And there's been plenty of studies that have proven this out. So I won't really take a position on that side of things. But I just look at this and say companies are afraid of it initially. And then once they do it, it's probably one of those things that was not nearly as big a deal as you previously thought. It doesn't add any cost to your overall structure. It doesn't add any changes to, meaningfully how you go and recruit otherwise.
No, it's one of those things where if it exists, you'll do it and it won't really take you more time or effort. If it doesn't exist,
you won't do it.
You won't do it. It'll be basically the same. I'm not sure that there's anything meaningful in either way.
I also wouldn't plan on it changing the world.
No, probably not.
It's not going to have that meaningful of an impact.
I don't think it's anything to get very excited about or very upset about. I think it's probably just kind of one of those things that you won't even really notice as we go down the road. Quick break here. We've got more financial exchange coming up in a little bit.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is all about retirement tax efficiency. Mike, let's go through some of these items that people typically hit in retirement as key drivers of income. Let's start with Social Security and its taxation.
Yeah, so for only about 40% of American households is Social Security actually taxable, but it's a pretty low threshold where it does become taxable. There's a combined income calculation they put through, and up to 85% of your Social Security benefits can be taxed depending on your income.
Other places that retirees typically generate income: interest from bank accounts and CDs and things along those lines. How is that typically taxed? Any changes for retirees?
Yeah, so no real change other than all of your other income is going to adjust, and so the rate at which you pay might change. But you're going to be taxed federally as well as by your state if it has an interest or income tax on the interest generated from something like a CD. Whereas if you're generating it from some other tool, such as a U.S. Treasury bond, that interest is not taxable, at least at the state level.
What about when we look at IRAs and Roth IRAs? People have been contributing, but now they're finally withdrawing once they retire.
Once again, in most states, federal and state taxes, if your state has an income tax. The one nice thing there is you're not facing the FICA taxes that you paid while you were working, but everything else is coming out of those IRAs.
And Roth IRAs should be tax-free after the money's been in for 5 years. The guide this month is titled Retirement Tax Efficiency. 2 different ways to request it. First, by calling 800-393-4001. Second way is by visiting ArmstrongAdvisory.com. That number again is 800-393-4001, or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
A little bit after 11 here on a Monday. It's Chuck, Mike, and Tucker with you, and markets are in positive territory after a tough last few days to last week. We've got the Dow up 171 points, the S&P is up 57, and the Nasdaq up 258 at the moment, so a broad-based rally taking place in equity markets. 10-year Treasury not moving a whole lot, down 1.6 basis points to 4.222%. And we've got oil at $79.85 a barrel for West Texas Intermediate, down 28 cents a barrel on the day thus far. AAA national average for gas prices at $3.50 and 0.1 cents. That is in the exact same place it was yesterday and down 2 cents from a week ago. So not really any movement there. Continuing just to hang out in the mid-threes on gas prices. We are seeing gasoline futures dropping a little bit, so don't be surprised if gas prices drop 10 to 15 cents over the next couple weeks based on what we're seeing in the gasoline futures market. And then we've got gold down $9.70 an ounce to $23.89 and 40 cents. Mike, there is a piece here today in the Wall Street Journal. It's titled, "Why Americans Aren't Having Babies."
None of us are qualified to comment on this one, I guess.
Why are we not qualified to comment on it?
All of us have a minimum of 2 children.
Yes. But not necessarily having any more. So the question to you, Mike, is why aren't you having
6
more? And you too, Tucker, why aren't you having more?
I don't want to divorce. I don't know. Divorce seems more costly than raising 3 more kids, I guess.
Because I want to be happy. I don't know.
Well, so let's talk about this, because this posits a few different things in here. So the first thing,
can you call my wife up? Let's ask her why we're not having 3 more kids. Let's
actually, yeah, we haven't done a live call in a little while. Can you get her dialed up there, Tucker, for us? That'd be fantastic.
Yeah.
Yes.
Yeah.
She's speed dial number 7, I believe. In any case, the share of women age 35 to 44 who don't have children currently sits at about 20%. This is pretty much in line with where it was during the late 90s and through kind of the early 2000s. The share of women who fit that categorization that didn't have children back in kind of 2012 through 2015 actually dropped to around 15%. So there was a broader group that was having children then, just not as many. And so, the question, there are two questions to ask. Number one, why are fewer families having children than a few years ago? And number two, the ones that are having children, why are they having fewer? Which one do we want to start with?
I guess let's go with fewer.
This is all, well, they're both fewer.
Why are the families that are having children having fewer?
Got it. So, first of all, this is all speculation because we're not actually talking to like 100 million people and no one knows for sure.
Then why should we speculate about it?
Because that's what we do.
We could not speculate about things like what it means for our systems and whether or not there's any evidence that there can be fixed.
Why they aren't having
all
babies.
All right, fine. Go.
I mean, if all we want to do is here's what happens when you don't have babies, we could do that.
All right. Why does the Wall Street Journal think people aren't having babies?
Well, what they think is not what I think.
Okay.
What do you think?
I think partly cost and partly we're doing it later, and so that definitely played a role in my family's decision. Didn't want to be raising kids at the same time as collecting Social Security in our case.
Tucker, what about you? Your thoughts?
I mean, it's flat out money. It's not even a debate.
I'll put another one out there just as something to consider, and that's necessity. For most of human history, you had kids because you needed them. Those were the people who worked on your farm, who worked in your family's shop, who you needed kids. And by the way, you also needed a metric crap ton of them. Because half of them would die before age 5.
True.
You know, so it was something where, yes, it was 1920 and we had 12 kids because 6 to 8 of us were going to make it. And like that was kind of the norm. And by the way, yes, we needed all of those people because there's a harvest every year and we're farming, or hey, we're all working in Paul Revere's silversmith shop, and this and that was how you basically built your life, was by having people in your family work for you.
Yes, and in countries where there is still a pretty high birth rate, that remains the case in a lot of instances.
So part of it, the necessity piece, has dropped off over the last 100 years, and you can see this even when you look at birth rates through the 20th century in the U.S., the huge drop between like the 1910s and 1960s, where you went from, like 5 to 6 kids being the norm to 2 to 3 kids being the norm. Big shift. Now you're at a case where, hey, it's 1 to 2 kids. And so the other part of that is certainly the financial piece. And
so I guess first piece would be, to fix that one, we've got to change child labor rules, which I don't think anybody's a big proponent of. Like, let's make sure we've got 11-year-olds in the manufacturing plant is not really top order priority for me.
No. The other piece, if we're being completely honest, I think a lot of people today who are in their 20s, 30s, and 40s, given just how it's become more acceptable to not have children, are being more honest with themselves about, hey, maybe I wouldn't be the best mom or dad, because it's a freaking hard job.
Yeah, that's true. I think men and women without kids today still get the question, why don't you have kids? But probably at a far lesser rate than they did in 1990.
Totally. And so I think it's, again, none of us know exactly what it is, but it's a combination of all these different pieces that are here. And ultimately what it's leading us to, and by the way, this is not just a U.S. thing. This is basically any developed economy thing that you're seeing.
Just to give you a sense of this, in the United States, the birth rate is 1.66 as of the last reading in 2021. In Canada, that was 1.43. In South Korea, it's 0.81. In the United Kingdom, it is, I just had the UK up, 1.56. In Germany, it's 1.58, and France actually has I didn't think it did, but France has a higher birth rate than the United States does at 1.83. I think maybe there's some immigration impact there of a much heavier portion of their population being immigrants right now, but nonetheless.
Could be.
The only one that I've actually seen over the last decade and a half increasing their birth rate is Germany. Again, don't know exactly what to make of that, and that's the other place I wanted to go with this is, you take a look at a country like Canada, for example, that if you're not familiar, Canada has far more in the way of laws and benefits that help subsidize the cost of care for young families. So I believe it's the case that legally each employer needs to offer a full year of maternity and or paternity leave, and the parents get to split that year up however they choose. I know for certain that there's heavily subsidized infant child care across Canada. A good friend of mine that lives in Vancouver is going to be paying, I think, $200 a month for child care for an infant, whereas I think it's $2,000 a month thereabouts in Massachusetts.
It's just an order of magnitude difference.
And yet, you go take a look at the birth rate since 2010 in Canada. It's gone from 1.65 down to 1.43. It's a pretty similar decline to what we have seen in the United States here. I'm not saying we shouldn't have those policies in place. That's up for debate. Like, we can have that debate. I just want to be careful about concluding that, hey, any country in the world has had success in attempting and succeeding in increasing their birth rate.
Again, I think the very worst thing that we could also do is the opposite of what China has done historically. China has said, hey, you're capped at, one child for an awful long part of their recent history. The very worst thing that you could do is, hey, you need to have kids, because I don't think there's any worse environment to raise a child in than one in which you're forced to.
Or being bribed to.
But
both of those sound bad.
These are things where, again, historically, there were both economic, social, and personal reasons to have lots of kids. In every single developed country, the economic ones have kind of gone away. I mean,
interesting. We've ruined the household economics of having a kid and built systems at the public and government level that are heavily reliant on having kids.
Here are the top 10 countries by birth rate: Niger, Chad, the Democratic Republic of the Congo, Somalia, Central African Republic, Mali, Angola, Nigeria, Burundi, Benin. It's, again, the reason that you have a lot of kids in Africa is because in many of those countries, you still need a lot of kids to be able to do the work to just provide for a family. You don't have that case in the United States anymore right now.
You don't.
And you go through and all of the bottom countries for birth rate, it's all developed, very modern economic societies. I mean, you go through the list, and that's kind of the deal. Once that necessity of having kids in order to provide for yourself goes away, yeah, there's variations from 1.5 to 1.9 children, but you're not seeing any. You don't suddenly look up and you're like, oh, Finland's having 8 kids per house. Like, no, they're not.
The question remains across all of those countries. Nobody has figured this out sustainably.
Right.
What do you do about the social programs that have been built under the assumption that the population continues to grow? We will find out in the United States in approximately 8 years, and we'll find out across the Western world in the next decade or two how those programs that are built on a growing population will or will not work in the future. Because I genuinely don't think there's any attempt you can make to fix the birth rate problem in order to solve the Social Security and Medicare problems. That's what I'm talking about, if anybody didn't know which social programs I was referring to.
Yeah. Let's take a quick break here now that we've, assessed, whether or not we're all acceptable human beings based on the level of children we're having, which is one of the more dehumanizing things I think that you can do to a person. Now that we've completed that exercise, let's talk a little bit about American borrowers and why they might be on a little bit shakier ground, and we've got trivia as well.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
An unexpected nursing home stay can be devastating to your savings. Call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. Protect your assets from the nursing home and maintain your wealth. Call right now. 866-848-5699. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Many of us have retirement savings that are held in tax-deferred accounts like 401ks and traditional IRAs. Hi, this is Chuck Zodda from the Armstrong Advisory Group. A heavy reliance on tax-deferred savings has significant implications, such as facing large tax bills during retirement. If you've been diligent about saving money, you might find yourself in the same situation after you retire. Our new guide this month is called Retirement Tax Efficiency. It outlines ways to develop a plan that helps you manage your retirement income and limit your tax liability, putting you in a more advantageous position for a secure financial future. Get your free copy today by calling 800-393-4001. That's 800-393-4001, and you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to STOP.
This message furnished by the National Association of Broadcasters.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood, void where prohibited, dine-in only. Building up to the Olympics later on this week, we are continuing our Olympics-themed trivia questions here on the show. In 1982, the Best Picture at the Academy Awards was a movie about 2 runners competing at the 1924 Summer Olympics in Paris. The movie won 4 Academy Awards, including Best Picture and Best Score. And the score actually might be more famous than the movie itself. Trivia question today: what is the only movie about the Olympics to win a Best Picture? Once again, what is the only movie about the Olympics to win Best Picture? Be the 8th person today to text us at 617-362-1385 with the correct answer. You'd win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, so we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 8th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, let's talk a little bit about the state of American families as it relates to borrowing. Piece in the Wall Street Journal. I'll read just a little sample from it. The American economy has held up well against higher inflation and interest rates. Many individual borrowers haven't. In fact, what we have seen is that balances on credit cards rose to more than $1.1 trillion in the first quarter. New York Fed data shows that was the second highest balance on record. And the increase has also occurred as credit card interest rates are at record highs, with the average annual percentage rate for credit cards hitting around 22% this year, according to the Fed, a peak in data that goes back to 1996. What this has done is the amount of interest paid on U.S. consumer debt, according to the Bureau of Economic Analysis, non-mortgage debt is now seeing 50% higher interest in the aggregate than what was paid a year ago, and mortgage debt is seeing about 15% higher interest expense than a year ago as well.
And what that's saying there is not just, hey, these are the stated interest rates, but it's the actual interest paid.
The amount
on
of
US
interest that Americans
debt
as a whole are paying.
Right. So everybody knows that a credit card can top 30% interest, but what this study is showing is that the actual paid interest, meaning the outstanding balances on these types of loans, has grown substantially for that non-mortgage debt. By the way, this chart from the Bureau of Economic Analysis is actually pretty interesting and telling. In that,
it is.
You've seen these two move lockstep for the last, 3 decades worth of data. And then you have seen this massive surge, obviously in the non-mortgage debt portion of this just over the last 2 years because of just the state of this economy right now. This is all, look, the $1.1 trillion of credit card debt, like we've talked about a few of these before. One, recognize that $1.1 trillion is not out of line with where balances were in 2019, adjusted for inflation. It also is not the amount of outstanding balance on credit cards on a month-to-month basis. It's just how much is being rung up on credit cards and in many cases paid off on a monthly basis. You can't look at this data and say that this is good news for the American consumer. I'm also not ready to walk away from this and say this is going to cause a financial crisis, because most of the data that I've seen on the usage of non-mortgage debt, whether it's auto loans, credit cards, or any other type of loan, has indicated that we're just kind of back at pre-pandemic levels again, except for a few certain circumstances. And so I just don't know that this is going to play out in a way that leads to a problem, but certainly could exacerbate one if we head into a recession.
Other interesting things that they have in here, they have a great chart that shows the percentage of consumers with unpaid bills in the previous month separated by homeownership status. So for homeowners right now, 3% of homeowners have not paid a water, gas, or electric bill that they were supposed to. For renters, that's 11%. For phone, internet, and cable, homeowners have about 2% of those people who haven't paid those bills. Renters, about 8%. Renter mortgage, homeowners are at less than 1%. Renters are at 7%. So again, also kind of showing that renters are in a tougher financial spot than homeowners in general.
Which again adds up to a lot of other stuff that we've covered. If you were in good financial health going into the COVID pandemic, then you've come out the other side in reasonable shape. And if you weren't, you're in a lot worse shape oftentimes.
So this, as Mike said, I don't think any of the data here is necessarily suggesting that American households are going to be the cause of some next great financial crisis. What I do think it means is that if a recession were to hit in the next 6 months, I think that there are a lot more American families that are, in a tough spot right now, and you could see, a little bit more pain than you would have if a recession had hit a year ago, as opposed to one hitting today.
I think that's fair. Just more desperation if we get layoffs, for example.
Yeah. Taking a look at markets here, we've got the Dow up 65 points, now the S&P up 34, so giving away a little bit of the earlier gains. Nasdaq's up 147 at the moment, so still all three major indices in the green, but not as much green as we saw earlier in the morning. Quick break here. We've got the trivia answer, and then we're talking the Social Security torpedo when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
There are many factors to consider when planning for your retirement, including the importance of your tax liability. This is Mike Armstrong from the Armstrong Advisory Group. Reducing tax liability can be potentially more effective than chasing higher investment returns. If you are nearing retirement and need to understand how to help your investment approach and limit your tax liability, call us at 800-393-4001 and request our new guide called Retirement Tax Efficiency. We'll educate you on ways to create a tax-efficient strategy, as well as the basic steps that make up a sound retirement plan, including how to protect your money in a down market. Call 800-393-4001 and get your guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, what is the only movie about the Olympics to win Best Picture? That would be Chariots of Fire, a timeless classic that tells the true story of two British athletes in the 1924 Olympics. Eric Liddell, a devout Christian, runs for the glory of God, while Harold Abrahams, a Jewish student at Cambridge, runs to overcome prejudice. Winner today of the Financial Exchange Show t-shirt was Carrie from Scarborough, Maine, and Carrie's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mike, what is that out there? Do you see that on the horizon?
No.
Torpedoes, direct front.
Oh my goodness! It is, Michael. It's the Social Security tax torpedo.
They totally made up this name for this one article.
I have never heard of the Social Security tax torpedo in my life. In November, I'll have been in the financial industry for 15 years. And I have never heard of the Social Security tax torpedo.
Well, I think that maybe William Reichenstein, who's a retired Baylor University professor and now works for T. Rowe Price, may have invented it. But the effect isn't invented. Here is what he is describing. When you are retired, if you have a comparatively perhaps small amount of income, but for a lot of folks they do fall into this category. For a single individual, income between $8,000 and $45,000 a year, in addition to their Social Security benefits, and then for couples with $13,500 to $55,000, can it be especially subject to this torpedo? Here's the impact. When you are in those very low areas of income, you actually won't pay any income tax on your Social Security benefit because only up to 85% of it is taxable. And while that is what you will face for a high income earner, if you're down in that lower region, you will not pay any income on that Social Security. However, what people end up doing here, and not intentionally, just through not planning, is they get to take advantage of that zero income tax for a large period of time. Maybe you start collecting Social Security at 62 and that covers all your bills. But then by the time you're 70, you start taking required minimum distributions a few years later.
Not 70 anymore.
75 now.
73 now.
Right. Depends on
and then
how
it'll
old
be
you
70.
are.
It's messy.
Pretty complicated.
Yes.
But effectively, it can dramatically increase the rate of taxes on you because not only are you going up in terms of income tax rates, but more of your Social Security benefit is becoming taxable at the same time. And so it creates this, as at least one person calls it, a torpedo type situation of more and more taxes being charged on it. The point that I think the article does successfully make, and it's a piece here from, where is this? Is this from Market Watch or Bloomberg?
Barron's.
Excuse me. Barron's makes, I think, one really good point with all of this, which is when you are working, there is really just one way of reducing your taxable income, unless you own a business and have all sorts of different things that you can depreciate. But if you are a regular W-2 worker like most of us are, there's very little you can do to reduce your tax burden. It's basically put money into the 401k, Have kids. That's a good one. But there's not much you can do to
having
really do
kids is still a net negative for your finances.
Helps the taxes, but
let's be clear.
There's not a lot you can do. Once you are outside of that scenario, once you are retired, you would think that it becomes a lot easier in terms of what your tax scenario looks like. But there's actually a multitude of new options being open to you. And one of the most common mistakes that I see is a desire to start living off that IRA almost immediately because, hey, I've been saving it my whole life. Like, why don't I start living off of it? And the article points out that can actually be one of the biggest mistakes. You in most cases, according to the authors here, and some CPAs out there, really want to start living off of your cash savings and taxable bucket first before going after those IRAs and saving up room for Roth conversions and such. To me, Chuck, this is, in my view, one of the most common questions and reasons people approach a CPA or a financial advisor in retirement is trying to sort out the complexities of where my income is going to come from. It's not always because I'm worried I won't have enough, but rather because I have no idea what the right thing is to do for my tax scenario.
And the thing is, you get one shot at this when you're retired. It's like,
yeah,
that's the ball game.
It's a pretty narrow window, right? You have like 5, maybe 7 years in that early stage of retirement to take advantage of some of these kind of loopholes.
And so it's something where, again, the reason to speak with someone who's qualified on this is because they've seen dozens or in some cases hundreds of these scenarios, and they've been able to game it out before and actually see what works and what doesn't. It's that experience, quite honestly.
And so if you're not familiar, what Chuck and I do when we're not airing this show in our day jobs is, as financial advisors for the Armstrong Advisory Group, guide people through those retirement decisions that they need to make. And while this is certainly one of the most common, it's just the beginning of all of these things that come up from, am I going to relocate in retirement? When should I be taking Social Security? But honestly, a very big one that comes up is, hey, I have these 3 different buckets of money. My husband does too, or my wife does too, and we're trying to figure out which ones do we go after first in order to pay our bills. If you have questions along those lines, just know you are not alone, and it is a really common question. But the answer is usually unique and specific to your scenario, and without a plan built to answer it, you can end up overpaying taxes is the answer. Not because your accountant's bad at doing their job, but simply because you haven't put the planning in to figure it out on your own. If you have questions along these lines and want to talk to a financial advisor at the Armstrong Advisory Group, give our office a call. We offer free consultations throughout New England. The phone number to reach us is 800-393-4001. If you're busy right now and can't make the call, we also have on our website a link where you can book a time for us to call you back at armstrongadvisory.com. But that phone number, once again, is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
There's a piece in the Wall Street Journal. It's titled, EVs Are Cheaper Than Ever. Can Car Buyers Be Won Over? And what it talks about is the fact that when you look at some of the cheap EVs that are out there, and their list prices, they've come down almost 10 to 20% in a lot of cases between the Chevy Blazer EV, the Volkswagen ID4, the Hyundai Kona, and it's saying, hey, look, you've got all these vehicles that are now priced a lot more cheaply than they used to be. Is this going to be what gets Americans over the hump on it? And my answer is going to be no.
Okay.
Here's why I'm going to say no. Mike, what's the average transaction cost for a new car these days?
$40,000.
About $48,000.
Yep.
Are there cars available for half to 2/3 of that?
Yes.
Do Americans buy those in large numbers?
Depends what you mean by large numbers, but
not large enough.
Yeah, not large enough to bring the average down.
Americans don't sit there and say, "Hey, this one costs $29,000. That's what I'm going to buy." By and large. And the reason for that is because if you look at the vast majority of Americans who buy new cars rather than used ones, they want bells and whistles. They have disposable income, or at least enough to be able to spend, now $1,000 a month on a car payment. And they say, yeah, I'm going to have $1,000 a month car payment for 7 years, and I'm going to deal with that because I want the $70,000 vehicle.
So is your point effectively,
it's not
price isn't what drove EV sales when they were up, and price isn't what's going to drive them now that prices are coming down?
If you want to buy an EV, you're going to buy an EV. If you don't want to buy an EV, you're not going to buy an EV. Now, it might be that
Are there some marginal buyers, though, that have been purely priced out of this market?
I'm not sure.
Yeah.
I don't think... Here's why I'll say no. These prices that you're seeing here, you can get a Tesla Model 3 or Model Y at these prices. You can get those in the 40s right now.
Sure.
They're already available. They're already being produced in large numbers. And
you can buy a used Tesla now for...
You can buy used ones in the 20s.
20s and low 30s. The problem is you can buy a used Civic in the teens and low 20s.
I think if you're talking about, hey, what is going to get people over the hump, it's answering the questions about what's the charging infrastructure look like, what's my range look like, how quickly can I charge? Because I think those are bigger hang-ups than the price.
Yeah.
Because if it were just price, then the average transaction value of a new car in the U.S. would not be $48,000. It'd be $28,000. Because you can go out right now and buy a great Honda Civic or Toyota Camry at that price.
If you're right, then it means at least temporarily these prices are going to come down more because you've got more tax incentives going into place.
Yes.
And while some of these automakers are starting to unwind their plans for EV expansion, some of them are already in place and they're cranking them out pretty quickly.
What I will say is very interesting right now. Some of the lease deals that you are seeing on EVs currently are absolutely insane deals.
Oh, because you can get the tax credit.
Because you get the tax credit applied to the lease. And remember, all that a lease is, it's, hey, how long are you going to drive it for how many miles, and what's the difference in price between when you buy it and when the dealer can sell it next? And so if $7,500 of that ends up being the tax credit, I'm seeing lease deals on EVs, like some of the Hyundai ones that are out there. I forget what the Ioniq 5 and 6. I'm seeing some lease deals out there for, like, again, 10,000-mile lease, so you got to be wary of what your mileage is. $200 to $300 a month I'm seeing. It's insane, some of the stuff that you're seeing out there. Now you got to poke around and still figure out, hey, is this for me? But if you are interested in an EV but not yet willing to commit long term to it, check out some of these 2 or 3 year lease deals out there because they are cheap in a lot of cases. Let's take a quick break here. When we come back, it's time for Stack Roulette.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. The United States Virgin Islands is the perfect place for your next vacation. Enjoy the sun-splashed beaches on St. Croix, St. Thomas, or St. John, and wake up every day to 75-degree temperatures, sand between your toes, and the finest cuisine anywhere in the Caribbean. The U.S. Virgin Islands is more popular today than it's ever been in its history, making it one of the most popular travel destinations around. This summer, heat is upon us, but the holiday season will be here before you know it. So make your plan to avoid the cold and enjoy the most fantastic spot in the Caribbean. Go to visitusvi.com right now and explore their incredible vacation packages today. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and book your trip right now. That's visitusvi.com.
Tax-efficient retirement planning starts with taking proactive steps to minimize your tax burden while you still can. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and as you approach retirement, it's crucial to consider the impact of taxes on your future finances. This month, our new guide is called Retirement Tax Efficiency. In it, we cover a variety of key areas from Social Security and life insurance to capital gains tax rates and Medicare brackets. The guide is designed to help you build a solid retirement financial strategy that limits your tax liability
eligibility.
Get your free copy of our new guide, Retirement Tax Efficiency, by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
There's an issue cutting through the partisanship in Congress. It's AM radio. The overwhelming majority of legislators, Democrats and Republicans, support a bill to keep AM radio in cars. But time is running out. Text AM to 52886 and ask Congress to bring this bill to the floor for a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Mike, what do you got for Stack Roulette for me?
I always like talking about Airbnb a bit because it is just kind of a phenomenon that's swept our nation over the last 15 years, the move away from hotels and more towards vacation rentals. Not that they didn't exist before, but certainly a much larger platform today than it was 30 years ago. There is a site that tracks Airbnbs and looks at volumes and rentals. It's called AirDNA, and through May of this year, according to AirDNA, earnings for U.S. hosts has declined in 22 of the past 28 months. A lot of that probably has to do with a return to international travel, would be my guess. The strong dollar has led to many people going overseas for travel. New York City itself, I think in the Beige Book, called out that New York City is having less travel this summer because more people going overseas and not quite as much desire for New York City.
Does this all deal with Taylor Swift touring overseas right now, not in the U.S. this year?
That's mostly what it is, I think. But there seems to be this somewhat rebellion, at least this is what the piece is about from Bloomberg today, among some owners saying, hey, we're going to ditch Airbnb entirely because we don't like their algorithms or we don't like their fees. And interesting concept, but I don't know that it goes anywhere. I will say on 2 instances, I have gone outside the Airbnb network, and I utilize the Airbnb platform to find a rental property, but then found if I just went directly to, it ended up being a company behind a number of properties.
Sure.
And on those 2 vacations, I said, you know what, I can save myself $300 to $600 by avoiding the Airbnb fees and going directly to this company. I would not be willing or comfortable to do that if it was just Chuck and his admittedly very nice home. It would not be the same comfort level. And so I think that there is some degree of safety and security that people get by using a platform like Vrbo and Airbnb.
I think part of it where you see that potentially being successful is for people who, as an example, they say, look, I'm going away 4th of July each year and I want to go to the same place.
Sure.
Once they already know the owner, okay, great. Can I, book this month? And why don't we split the difference in, fees that you would pay to Airbnb and blah, blah, blah. And so, hey, normally the week costs us $2,000 for the week. We're going to do it for, $1,800 because we can cut Airbnb out. And now we've got the place that we want for the week.
But the overall, look, there's massive growth in this platform during COVID because people didn't want to stay in hotels. That's gone. People are more budget conscious now. They don't necessarily want to splurge on the 3,000 square foot home for their vacation.
No.
And so you're going to see this drop off. I'm still very interested to see with the New York City impact, with Airbnb effectively being completely banned there. So far, all you've really been able to decipher is that hotel costs have gone up, and you haven't really seen anything in terms of a drop in housing costs.
I want to talk a little bit about movies. I mentioned on Friday that I went to see the new Twisters movie, which is pretty darn good, might I add.
Apparently you weren't alone there, Chuck.
I was not alone. This movie did...
Well, you were kind of alone because your family was gone.
I was, and so beyond that, so I went to... It was a 5:20 showing, I think, on Thursday, and there were maybe 8 of us in the theater.
Yeah,
so it was actually
pretty
kind
lonely.
It was kind of enjoyable, like just not having anyone right next to me. But it ended up doing $80.5 million domestically in its open, another $42 million worldwide. So you had $123 million on a $155 million budget. So the thing's going to end up, again, I don't know what it's going to do, but probably $350 to $400 million. So it's a nice win there for Universal. And the question is, okay, like, why is this hitting? And I have a theory. I don't know if I've talked about this with you or with anyone else ever. I talked about it with someone last week, but I don't know who it was. This is who I am at this point. Mike, who are, like, new big stars in the world of, like, movies and TV?
Oh, I have no clue.
This guy is.
That guy that was in Top Gun Maverick?
Glenn Powell.
Glenn Powell
okay,
is,
one.
yeah.
Glenn Powell.
Like other names that you'll see, like Timothy Chalamet is like very, very hot these days. Yeah. You know, like there's. But here's what's interesting to me, Mike. Who's the last person that you know who became big from like a streaming TV show? There's not many.
No.
Like there still is something else that happens when you're in a big movie and become a movie star as opposed to like a streaming star.
That kid in the Bear. Jeremy Allen White.
Even him, like, no one knows his name. Like, that's the thing. They just know.
But you're starting to see him in movies.
You
but
are.
I understand
like,
your point.
And Glenn Powell is, like, out there as a draw now. And I think there's something, you know, beyond just the streaming. You got to find actual people who can carry movies. And that's something that I think they're starting to maybe find now. Let's take a quick break for the entire rest of the day, but we'll see you tomorrow on the Financial Exchange.